I think it's very high now, and it should be coming sooner, not later. So I think that's why this is not going to last long. This bounce should be very close to its end.
In today's video, Harry Dent, author of Zero Hour, talks about what's up with bonds, the next moves of the Fed, the raging inflation, and the coming recession. Dent has been predicting a great reset of the biggest financial asset bubble in history. The market historian predicted a painful crash in stocks and an economic depression, and discusses the next moves before the big crash. He believes that the top is in and the Fed is tightening aggressively. Could the markets make a new high?
Question for you. What is the likelihood of a U.S. market crash in 2023?
Well, I think it's very high now, and it should be coming sooner, not later. So just to review, we finally did have that first crash in 2022. It was late November peak for NASDAQ, a little bit before that for the Russell. In fact, a number of markets peaked literally, Jay, around the world in succession. And the last one was the S&P 500 on January 4th, right at the beginning of 2022. So that was a very meaningful top. And then, but I also looked, and I had to analyze, Jay, all throughout history of the stock markets. What does it take to say a bubble's finally over? And you really need a 30 to 50% first crash. And so that is what we got in 2022. But that is the first crash. So if this is what I think it is, the ending of the second major stock bubble and the second major real estate bubble, of which we've never seen two major bubbles this close together in a row before in all of history. So the first one was a natural bubble with strong demographics and consumers and investors feeling great, kind of like the Roaring '20s bubble. But the second one was 100% artificial, all $10 trillion of money printing and fiscal stimulus over 2 years, and we're still feeling that stimulus a bit, but they were forced to tighten. And so I think that's why this is not going to last long. This bounce should be very close to its end, because now the tightening should start to hit over the next year. And this market does not deserve to be anywhere near the highs, with the fundamental demographic trends, which I measure long-term so well. At this lowest point, I was saying all the way back in the early years of my forecast in the 1980s, this boom would end 2007. We go into a long sideways market with the baby busters until late 2022 or so, and then we would have the millennial boom to follow. Well, we have still not corrected this bubble yet, this second bubble, this artificial one. And that, I think the next wave down is likely to be from about now into the end of this year. And then a final wave down in 2024, and then we should be done with this. Now, note, the natural time for all of this to happen would have been on the decennial cycle and on my demographic cycles, that we would have had a peak in more like early 2020, and then this crash into late 2022. That's what have been. But with all this stimulus, I think they have basically pushed off the whole cycle for 2 years. So now we end up peaking in late 2021 in stocks, and we'll end up bottoming mid to late 2024. So this is just, and any major crash should have 3 surges down. So we saw that first one last year. This bounce has been longer than usual. The 1929 first bounce was only 5 months. This is going on 8 months now. So this is really, really stretched. The next wave, if I'm right, and we're in this major crash of a lifetime, and finally getting rid of this bubble for good, then this next crash will take us to major new lows by late this year, early next year, and the whole thing will bottom somewhere between mid to late 2024. That's my scenario for now, and that has been put off by about 2 years from the natural scenario. We should have already, all of my cycles pointed all the way back to the lowest point for stocks around late 2022 last year. This stimulus has simply pushed that off. Now, so to me, we have a war to see who's stronger. Is the natural economy ultimately stronger, or is there central banks? And I'm betting that the natural economy is going to win here, frankly, because the central banks went so far. I think their big mistake, Jay, they didn't have to overreact so strongly to COVID. It's a natural crisis. Nobody would have been surprised if the economy slowed because everybody was sick and not spending as much and staying home. They had to go stimulate harder than ever. $10 trillion of stimulus in 2 years, higher than any time in all of history. And now inflation suddenly goes from 1% to 9%, and now they have to tighten. And you know what? The market's still saying they haven't tightened enough, and they'll probably have to go, as expected, at least another 50 basis points. This will be the strongest tightening since the early 80s. And I say the economy is not going to handle it well, that it's an illusion that the economy is strong. The economy's only been strong because of unprecedented COVID stimulus, which they overdid beyond any imagination. And when this thing falls, there will not be a soft landing. It will be a hard landing. So that's what I'm betting on. But the proof of that pudding should come in the second half of this year, and it should come soon, or maybe we're more in a kind of a confused sideways market. I mean, and the markets, to me, always know where they're going. They just want to leave most people in the dust, and the smart money makes the most gain. I think even the markets don't know what side's up after so much stimulus and so much artificial impact from central banks. I think even the markets aren't really clear. But again, proof of the pudding would be another strong downturn starting somewhere soon. If it doesn't start in the next month or two, I'm going to have to revise my forecast. And if that happens, that should be most of the damage, but there still should be one more wave down in 2024 before this is over. So this is not smooth sledding ahead for stocks. And this correction, I say, is not over. It's just begun.
Okay. And so for context, today is July 12th for anybody watching. Canada just increased their rates by 25 basis points this morning. So you're expecting the US to go up by maybe 50 basis points in 2 weeks.
Yeah, that's pretty much expected on Wall Street now, that they need another one minimum and probably 25 basis points hikes. And you got to remember what people miss about this, and this is what's really confusing, especially right now. Everything happens on a lag, all this stimulus. So this 10 trillion in stimulus is still hitting now, but it should hit fully by the end of this year, 100% fully. And then that stimulus is gone. And then this new tightening, which started in March of last year and has continued clearly until May, and looks like it'll continue probably into the summer, another 2 hikes. That tightening is going to hit for a year after that, roughly. So well into 2024. So we're just at the peak of the stimulus hitting, and this was massive stimulus. So no surprise the economy's held up well, but I think there's going to be a sharp reversal soon, and now the tightening's going to hit, and the stimulus will have worn off soon, and then we'll have nothing but the tightening hitting until at least late summer of 2024. And that's about when I would expect a bottom.